Hello, it's a lovely good evening once again from here in Delhi, and hope as always that each one of you are absolutely fine, happy, and of course in fine spirits. So, after having a good look over the initialities of this particular accounting standard, now we are moving over to the first section. There are all in all 29 sections which we have kept, and this is the first section wherein we are going to have a good look over the computation of goodwill, non-controlling interest, and gain on bargain purchase. Because if you have attended the first session, you must have noticed that in order to do accounting on the date of acquisition, the acquired company also need to find out the amount of goodwill and of course the non-controlling interest and gain on bargain purchase in case if there is any. So that's what actually today we are going to take up. Section 1 belongs to this particular concept, calculation of goodwill, non-controlling interest, and gain on bargain purchase, as you can see. So we start the session now. 1.1. Here it is stated that FX Limited acquired 100% of MX Limited. Now it is very important when you do the questions on what we call computation of goodwill, non-controlling interest, or for that instance on gain on bargain purchase, you need to pay extra attention that what is the stake. This time you have a complete 100% stakes in the MX Limited, that with no question of any NCI. Then you have to pay to the attention what amount actually you paid as consideration to acquire the control, and also you have to take into account the acquiring company, which is MX Limited, the fair value of net assets on the date of acquisition. So it is mentioned that fair value of MX Limited net assets at the time of acquisition amounted to rupees 8 lakh. And we are supposed to compute the amount of goodwill, and we have to pass the entry in the books of FX Limited. Not a very tough task. You can, I think, manage this question. But still, in order to compute the amount of goodwill, all you have to do is simply just note down on the date of acquisition. What you have to note down on the date of acquisition? On the date of acquisition, you have to note down the net identifiable assets. Net identifiable assets of acquiring company. Generally, we say fair value of net identifiable assets of acquiring company. So this is what you have to note down very carefully. And it is clearly given in the question: on the date of acquisition, fair value of net identifiable assets of acquiring company is equal to 8 lakh. Once you have found out that, then you have to break it up into two segments. You have to find out what part of net assets on the date of acquisition of acquiring company belong to NCI and what part of the net assets belong to acquirer. That's all. That's all. Very simple. Very simple. No complications here. Since in this particular question there is no NCI, so I may say whole of the net identifiable asset, that is 8 lakh, belongs to acquirer. So on the date of acquisition, whatever net assets of acquiring company are, all the net assets belong to acquirer, simply because in this question there is no NCI. So once you have found out what proportion of the total net asset belong to the acquirer company, now you have to compare it with the amount of consideration. Now this time it is stated in the question that consideration amount is 9,60,000. Mode of payment is not given. So if mode of payment is not given, always presume that consideration has been paid by way of cash. Anyway, the amount of consideration happens to be 9,60,000. Now because your amount of consideration is more than what you are getting, so quite obviously it is a case of goodwill. So this time you will have goodwill. Very simple to compute the amount of goodwill. No complications here. In fact, nowhere we are going to have the complications. So after having found out the goodwill, all we have to do is now just have a look over here. This is how you have to present in the examination. First of all, write 100% of net identifiable asset. This is exactly what we did, 8 lakh. Out of that, subtract the share of NCI. In this question, there is nothing for NCI because there is no NCI. So whatever is left, that belongs to what we call FX Limited, the acquirer company. So share of acquirer or FX Limited in net identifiable asset is equal to 8 lakh. You compare it with the amount of consideration. The difference is goodwill because amount of consideration is more than share of net assets. Then as far as entry is concerned, you will write this entry: net identifiable asset account debit 8 lakh. Correct? If in this question there would have been NCI, you would have written 2 NCI, and then you write 2 cash. I have written here 2 cash. on the presumption that entire amount has been paid by way of cash. This is with respect to consideration. Then the difference will be equal to goodwill, although we have already found out the goodwill, so not a very difficult task. Now point 1.2. On 31st of March 2023, K9 Limited acquired L5 Limited. And it is stated that in order to acquire L5 Limited, K9 Limited issued 60,000 equity shares of rupees 10 each, and that were trading at rupees 240 on the date of acquisition. The book value of L5's net assets was 72 lakh on 31st of March. Now the point here you need to note is that we are not concerned with the book value. Sometime book value would be given to you, but you should not be concerned with that. You are more concerned with the fair value of the net assets of the acquiring company on the date of acquisition, which in this case happens to be 135 lakh. Another point to note in this particular question is that this time stakes are not given. Percentage of stake is not given. Often you may come across actually questions wherein you would find that percentage of stake is not given. In case percentage of stake is not given and only thing given is that so and so company is taking over the other company, you always presume even in such a case 100% of the what we call stakes have been acquired. Is it clear to you? If 100% of the stakes is acquired, then there is no problem. So similar to the last question, first of all, I will note down the net identifiable asset on the date of acquisition, which in this case, because we have to note down the fair value, so I will write here 135 lakh. This is the fair value of net identifiable asset. Correct? And from here on, I am going to actually bifurcate it into two parts, that what proportion of the net asset belongs to NCI and what proportion belongs to acquirer. Unfortunately, even in this question, you may say that there is no NCI, so nothing belongs to NCI. Entire amount 135 lakhs belongs to acquirer company. And then all we have to do is to compare it with the amount of consideration. Now in this question, consideration is not given in absolute term. What is given to you that you are offering 60,000 shares of rupees 10 each. Their face value is 10, but you are offering them at the rate of 240. So you will multiply 60,000 with 240 to get the amount of consideration. That will be equal to, I think, 144 lakh. So this is your what we call amount of consideration. Now the difference of these two again will deliver you goodwill, because amount of consideration exceeds the share of acquirer in the net assets. Is it clear to you? This is how you have to do this particular question. See, 100% of net identifiable asset is given to you, that is equal to 135 lakh. NCI share is nil. Acquirer share is 135 lakh. Then consideration is 144 lakh, that is 60,000 share at the rate of 240. So difference is equal to goodwill. Now how you are going to pass the entry in this particular case? 135 lakh worth of net identifiable asset will flow to you. Then in this case no NCI. Then here I have written 2 capital. Why I have written here capital? Because this time we are offering shares. So 60,000 share at the rate of 10 each. So amount of consideration now we are putting up. So in order to put up the amount of consideration, I will write 2 capital 6 lakh. And besides, I will write 2 security premium 60,000 into 230. That is equal to 138 lakhs. Is it clear to you or not? So 6 lakh plus 138 lakhs makes it 144 lakh. And the difference will be equal to goodwill. And now we move over to another part. A Limited acquired 80% of B Limited for 9 lakh 60. Now in this question there will be NCI to the extent of 20% without an iota of doubt. And in order to pay 9 lakh 60,000 worth of amount, we delivered equity share at par. Further, it is written that fair value of B's net assets on the date of acquisition amount to rupees 8 lakh. Question asks us to compute the non-controlling interest and goodwill, and question is also interested in journal entries. So in this particular question, as usual, first of all, I am going to note down the NIFA on the date of acquisition. Net identifiable assets of acquiring company on the date of acquisition in this particular case happens to be 8 lakh. Correct? So I will write here 8 lakh. So 8 lakh is the amount. Out of this 8 lakh, now I will compute NCI share. Fortunately, in this question, there is NCI. And share of NCI is equal to 20%. If I take 20% of 8 lakh, that will be equal to how much? That will be equal to 1 lakh 60,000. So out of 8 lakh worth of asset, I may say 1,60,000 worth of asset belongs to NCI. So what is the share of acquirer now? In this case, in order to know acquirer share, what I have to do, I have to subtract 160 from 8 lakh. If I will subtract 160 from 8 lakh, I will get 6,40,000. So I may say share of parent or share of acquirer company in the net identifiable assets on the date of acquisition of acquiring company is 6,40,000, sorry. Now we have to compare it with the amount of consideration. Now consideration is given to you as 9,60,000. So 9,60,000 worth of consideration I have paid. The balancing figure which I am going to get is equal to 3,20,000. Correct? 3,20,000. So 3,20,000 will be my goodwill because consideration exceeds the share of net assets. Is it clear to you or not? 100% of net identifiable asset is 8 lakh. Share of NCI is 160. Share of acquirer is 6,40,000. Compare it with 960 consideration, you will get the goodwill. But try to understand. Through this particular question, I will explain one concept also. Earlier in the last session, I had talked about this particular fact that in order to compute NCI, the entity, the acquiring entity has the choice. It can compute NCI either on proportionate share of net assets basis or on fair value basis. When we compute NCI share in this manner, that is by applying the percentage of NCI to the what we call net identifiable assets. If in this manner we compute NCI, it is known as proportionate share of net assets method. We are simply finding out the proportionate share of NCI in the net assets, which is obviously a stake of NCI into what we call NIFA. It is as simple as that. Correct? NCI can be computed on proportionate share of net assets basis or on fair value basis. Correct? So this time we have computed the value of goodwill by taking NCI on PSNA basis. Now suppose if I would have computed NCI on fair value basis, because NCI can be computed through PSNA approach or through fair value approach. It is the choice and discretion of the what we call acquirer company. Correct? Acquirer company, as per their will and desire, may value NCI on PSNA basis or fair value basis. Now suppose if I would have taken NCI on fair value basis, what impact and repercussion it would have had on the valuation of goodwill? Let's have a look. Suppose if I am going to compute NCI on fair value basis, this time what will be the value of goodwill? First of all, as usual, we are going to write the net identifiable asset on the date of acquisition. Net identifiable asset will remain same 8 lakh, no doubt about that. Is it clear to you? Now out of this 8 lakh, what proportion belongs to NCI? Now, I will not write 20% of 8 lakh because I have decided that I am going to value NCI on fair value basis. So how we are going to compute NCI value on fair value basis, that is the point which you need to understand. See here. Initially in the question it was stated that we paid 9,60,000 to get 80% share. In order to get 80% share of acquiring company, we paid actually 9,60,000. Isn't it or not? So for 80%, amount paid is equal to 9,60,000. Because when A Limited must have acquired 80% share, when A Limited acquired 80% share, it must have paid 9,60,000. But on what basis? On the basis of fair value of the shares of what acquiring company. It is quite obvious. So this 80%, in order to acquire 80% shares, we paid 9,60,000. So 9,60,000 represents the fair value of 80% stakes. So if I had acquired 20% stakes only, then what amount I would have had paid? So 20 into 9,60,000. 20 into 9,60,000 divided by 80%. If I divide it by 80%, I will get 2,40,000. That means the fair value of 20% stakes is equal to 2,40,000. So this time NCI is valued at 2,40,000. Now this 2,40,000, what does it suggest? It suggests that out of 8 lakh worth of net identifiable asset, 2,40,000 worth of asset belongs to NCI. Now I subtract 2,40,000 from 8 lakh, so I will get acquirer share. So what will be acquirer company share? Acquirer company share will be 8 lakh minus 240, that will be equal to 5,60,000. And then I am going to compare it with the amount of consideration. Consideration amount, as you have already seen, is equal to 9,60,000. Now this time you must have noticed actually our amount of goodwill is equal to 4 lakh. So quite obviously when I am going to take NCI at fair value, the amount will be different from the one which I got when I valued NCI at what we call proportionate share of net assets basis. So some of you might actually wonder, sir, we are getting two different answers. Obviously, when we are following two different approaches, we will get two different answers, no doubt about that. But when we will dig deep into the concept, we'll find that both these different methodologies are leading us to same results. I will prove that. At least by now, you are familiar with one thing, that NCI can be measured on proportionate share of net assets basis, on PSNA basis, and it can be measured on fair value basis. On fair value basis. At least this thing is clear to you, correct? You must have also noticed that when we computed NCI on PSNA basis, we got the amount of goodwill as equal to 3,20,000. And when we computed NCI on fair value basis, in that particular case, the amount of goodwill which we got is equal to 4 lakh, isn't it or not? Now, you need to understand that whatever amount of goodwill which we get ultimately will be reflected in the consolidated balance sheet, which we would prepare later on, correct? So, in the consolidated balance sheet, suppose if I reflect the amount of goodwill at 3,20,000, so I must know that this amount of goodwill actually belongs to acquirer company only. Acquirer company only. When NCI is computed on the basis of PSNA, in that case the amount of goodwill which we get and write later on in the consolidated balance sheet, it reflects that this amount of goodwill belongs to acquirer company only. Now have a look over here. Now suppose if I compute NCI on fair value basis, quite obviously I am going to get some amount of goodwill, and that particular amount of goodwill will be represented later on and reflected in the consolidated balance sheet. Now in the consolidated balance sheet, if NCI is appearing at fair value basis, whatever amount of goodwill appears in the consolidated balance sheet, it means this amount of goodwill belongs to both acquirer and acquiree. It belongs to both acquirer company and acquiree company. Sorry, I have written acquiree company. It belongs to both acquirer and NCI. Now we have seen that acquirer share is 80% and NCI share is 20%. Out of 4 lakh, if I will compute 80%, that will give me the same result, 3,20,000. So even though different methodologies are being adopted, yet it will lead us to the same result as I just proved. Is it clear to you? So it is not going to make any hell of a difference, but it is the choice of the company whether they want to reflect NCI at fair value. Suppose if we have represented NCI at fair value, so both NCI and amount of goodwill will appear in the consolidated balance sheet. But in that case, I will come to know that whatever amount of goodwill appearing in the balance sheet, in this goodwill, there are stakes of both NCI and acquirer company. Is it clear to you? That is why when we compute NCI on fair value basis, in that case, whatever goodwill we get, it is known as full cost of goodwill. It is also known as full value of goodwill. Correct? And in this case, what we get, we call it partial goodwill, because it shows partial share of acquirer. Here it is showing full value of goodwill. That means it reflects the share of both acquirer and acquiree company. Is it clear to you or not? So this is the solution I have done through fair value basis. So you can have a look over here also, although I have explained the point. 8 lakh. Now NCI on fair value basis, as we computed, 2 lakh 40,000. So 5 lakh 60,000 will be the share of acquired, 9 lakh 60 purchase consideration, 4 lakh will be the amount of goodwill. Now in this case, suppose if you are asked to pass the entry, net identifiable asset, first of all you will write, then it is always better to write 2 NCI, because when I am writing 2 NCI, indirectly it means from 8 lakh I am subtracting NCI share. So I am now actually basically reflecting the share of parent. 8 lakh minus 2 lakh 40, that is 560. Then I will write 2 consideration. Here I will write 2 capital, because we are paying the consideration by way of capital. Otherwise you can write consideration also, no problem. So indirectly now it means I'm comparing 560. In the entry I'm comparing 560 with 960. So I will left up with goodwill 4 lakh. Is it clear to you? Now 1.4, Z Limited acquired 60% interest in P Limited on January 1, 2023, and Z Limited paid 700 lakh in cash for their interest in P Limited. Correct? Now further it is written the fair value of P Limited asset is equal to 1,800 lakhs. This time fair value of asset is given separately and fair value of liability is given separately. Fair value of asset is 1,800 lakh, fair value of liability is 900 lakh, and question is asking provide the journal entry for the acquisition using Ind AS, assuming that P Limited does not wish to report NCI at fair value. So in this case, if NCI is, the company is not interested in what we call reflecting NCI at fair value, indirectly it means we have to follow PSNA approach. Isn't it or not? Correct? For example, in this case, if suppose I am going to ask you how you are going to compute. So first of all, you are going to write net identifiable assets. Net identifiable assets on the date of acquisition. On the date of acquisition. On the date of acquisition, in order to find out net assets, we have seen that fair value of asset is 1,800, fair value of liability is 900. So net identifiable asset must be equal to 900. The next target should be to subtract what we call your NCI share. Now because in this question we have to follow PSNA approach, as entity is not interested in reflecting what we call NCI at fair value, so I will write here NCI and I will compute NCI on proportionate share of net assets basis. So what will be the proportion of NCI? Since you have acquired 60% stakes, quite obviously 40% stakes, 40% of 900. 40% of 900 will be equal to 360. So you will compute 360 and then you are going to subtract it. When I am going to subtract it, I will be left up with, I think 640 or 540 sometime. Let me check it out. 900 minus 360, that is equal to 540. So what does this 540 reflects? This 540 reflects acquirer share. Acquirer share. So you will write here acquirer share. Acquirer share is equal to how much? 540. Now you compare it with the amount of consideration. Now we are going to compare it with the amount of consideration. The consideration amount, what is the consideration amount in this particular case? You must have noticed that consideration was 700 lakhs. So consideration is 700 lakhs. Still the amount of consideration is more than the what we call net assets acquired. So that means 160 will be goodwill. That will be the amount of goodwill. Now suppose if in this question NCI would have been valued at, fair value, correct? And just for the sake of understanding. So NCI at fair value, what will be the value in this case? I mean to say NCI at fair value. How you would have computed? For 60% stakes, you are paying consideration of 700 lakhs. So what will be the amount of consideration for 40%? Correct? That is 40 into 700 divided by 60. That is equal to 467 approximately. So 467 would have been NCI. Now, if amount of NCI would have been 465, then in this case, what would have been the amount of goodwill? Because we have already computed NIFA, net identifiable asset on the date of acquisition is equal to 900, as we know. Correct? And from 900, I will subtract NCI, this time at fair value, that is equal to 467. So this time acquirer share will be equal to only this much, 900 minus 467, which is equal to 433. So this time acquirer share only will be equal to this much. So this is your acquirer share. So if NCI is valued at fair value, you have noticed that acquirer share is little bit low, 433. Now compare it with the amount of consideration. If you are going to compare 700 lakhs, then obviously in this particular case, your goodwill amount is 267. So obviously when we are going to have NCI at fair value, amount of goodwill will differ without an iota of doubt, but at the same time, as I just proved earlier, it will lead us to the same result. Correct? 1.5 you can manage it by yourself. It is simple. And 1.6 now I am picking up. 1.6 says, on 1st of January 2023, Hansa Limited acquired 70% of the equity interest of Nainital Orchards Limited in exchange of cash consideration of 700 lakhs. 700 lakhs we paid. The identifiable net assets are measured at 1,500 and liabilities are measured at 600. Now my question to you is very simple. It is almost similar to the last question, and here I need not require to do much more. Only thing is that question is asking us that NCI is measured at fair value. Correct? NCI is measured at fair value. So first of all, always compute net identifiable asset on the date of acquisition. And of course, when I'm writing net identifiable asset, it means fair value of net identifiable asset. It is given in the question that identifiable assets are 1,500. However, liabilities are 600. So 900 will be your amount of net identifiable asset. Out of this net 900, now you have to find out NCI's share. However, NCI is being measured at fair value this time. So for 70%, the consideration is equal to 700 lakhs. So what will be consideration for 30%? Because 30% will be proportion of NCI. What will be the amount of 30%? So 30 into 700 divided by 70%, it will be equal to 300. So NCI at fair value will be equal to 300. That means out of 900 lakhs worth of assets, 300 worth of asset belongs to NCI. So whatever is left, that reflects acquirer's share. Acquirer share. So acquirer shares, as you must have noticed, is equal to 600 lakhs. And now you compare it with the consideration. The amount of consideration is equal to 700 lakhs. So indirectly it means you are having a goodwill of 100 lakhs. Is it clear to you or not? So this is how you will solve this question, but at the same time, if you want to pass the entry, you will have to pass the entry in this manner. First of all, whenever in the question it is given asset and liability, so in the entry also you write assets separately and liabilities separately. So if I have written asset 1,500, liability towards the credit side, it means I have reflected net assets 900 lakhs. Second thing is that always write NCI share. Now, by putting up NCI share towards the credit side, it means from 1,500, I have already subtracted 600. Now I am subtracting 300 further. So that means now I am left up with share of acquirer company. Correct? And now I will write here to cash consideration 700. So indirectly, it means now I'm comparing the share of acquirer with the consideration. That is why the difference which we get is goodwill. 1.7 states that C Limited acquired 60% share of D Limited for cash payment of 2 lakh. C Limited acquired 60% shares in D Limited for a cash payment of 2 lakh. Further, the question says that fair value of non-controlling interest is 1 lakh, correct? And in this question, it is given to you that fair value of non-controlling interest is 2 lakh. It is already given to you in the question. Further, the question says that the amount was determined with respect to the market price of D share. Obviously, when we determine the NCI share, we take into account the fair value of the share, no doubt about that. Calculate NCI and goodwill. Now, in this question is asking us, you have to compute the amount of NCI and goodwill. Question number 1 states that fair value approach and proportionate share of identified net asset acquired approach if aggregate value of net asset is equal to 2,40,000. Have you got the question in this particular case? What is this particular question? This question, part 1 of the question says that, first of all, presume that net identifiable assets of your acquiring company is equal to 2,40,000. First of all, question is telling that presume net identifiable asset at 2,40,000. Now question is asking you, compute the amount of compute the amount of NCI on fair value basis and on PSNA basis. This is one question. As far as part 1 is concerned, this is one question, that you have to compute NCI on fair value basis and PSNA basis, and in this part you have to show the amount of goodwill also when you are computing NCI at fair value and when you are computing NCI at proportionate share of net assets basis. This is basically the question. First of all, you must understand this particular question. Now suppose, just for the sake of understanding, suppose I'm going to solve only the first part. Remember one thing. In first part, NIFA is equal to 2,40,000. Correct? NIFA is equal to 2,40,000. Suppose if I compute NCI on proportionate share of net assets basis, NCI on PSNA basis. Because we have got 60% stakes, so NCI stakes must be equal to 40%. And first of all, I will write 40% of 2,40,000. If I will take 40% of 2,40,000, I think it will be equal to 96,000. So 96,000 will be the NCI share out of 2,40,000. I will subtract 96,000 from 2,40,000. If I will subtract 96 from 2,40,000, 240 minus 96, I will be left up with 1,44,000. That means acquirer share will be equal to 1,44,000. So 1,44,000. Now I will compare it with the amount of consideration. Amount of consideration is given as 2 lakh. Because amount of consideration is 2 lakh and which is more than the share of net assets, so in this case there is goodwill. Now suppose if I consider NCI at fair value. Correct? So NIFA, first of all, I will write as usual, amount of NIFA will be equal to 2,40,000. And from 2,40,000, I will write NCI at fair value. Now remember one thing, in this case, fair value of NCI is already given to you. That is 1 lakh. It was written in the question itself that NCI has been valued at fair value. That is 1 lakh. So NCI at fair value 1 lakh is already given to you. You need not require to do anything. So that means in this case, acquirer share of net assets will be equal to how much? That will be equal to 1,40,000. And all you have to do is now compare it with the consideration, which is 2 lakh. So in this case, what you get, that is 60,000 as goodwill. This question I have solved here in part 1A and part 1B. You can look over here. In part 1B, actually, I have taken NCI on proportionate share of net assets basis 96. 1,44,000 is acquired share. Compare it with the amount of consideration, you will get 56,000 as goodwill, which we got. Then, net asset 2,40,000, NCI at fair value 1,40,000, then consideration, and then it is goodwill. Similarly, in case C, there is no difference. Only difference is that now you presume net assets as equal to 3,30,000. Suppose if you presume net asset is equal to 3,30,000, your NCI at fair value will remain same, presuming we are computing NCI at fair value. So NCI at fair value will remain same, 1 lakh. So now we will get what we call 2,30,000 as acquired share of net assets. We will compare it with the amount of consideration, 2 lakh. In this case, there will be 30,000 goodwill. Sorry, in this case, because amount of consideration is less in comparison to the net assets, so we shall get gain on bargain purchase. Yes, gain on bargain purchase. And suppose if I compute under part 2, 3,30,000 net assets, suppose I compute NCI on proportionate share of net assets basis, we will get 132, share of acquirer 198. Then I will compare it with rupees 2 lakh of purchase consideration. And amount of purchase consideration is equal to 2 lakh, slightly higher. So even in this case, we are going to have goodwill. Is it clear to you or not? Then 1.8 question states that W1 Limited acquired S1 Limited by purchasing 60% of its equity for 15 lakh. So we purchased 60% of equity shares by paying 15 lakhs in cash. The fair value of NCI is determined at rupees 10 lakhs. So fair value of NCI is already given. Now question says that net aggregate value of identifiable assets and liabilities as measured in accordance with Ind AS is equal to 5 lakh. Question simply is asking us to pass the entry in this particular question. Question is simply actually asking us to pass the entry. Is it clear to you? So, if you are going to pass the entry, you have to be careful. First of all, write the amount of identifiable asset. Net identifiable asset is equal to 5 lakh. Now, NCI value is given 10 lakh. NCI on fair value basis is equal to 10 lakh. Is it clear to you? And now we are paying a consideration of 15 lakh. So, difference will be equal to goodwill. Is it clear to you or not? So, this is interesting question. Because in this particular question, they have straightaway asked you what we call amount of goodwill. And then they have asked you entry, and then 1.9 question. Actually, you should be in a position to do this question of your own. K1 Limited acquires K2 Limited by purchasing 90% of equity share for 900 lakh in cash. Similar to the last question, fair value of the net assets is how much, not clearly given. Let me go a little bit further. Then management have elected to adopt full goodwill method and to measure NCI at fair value. Now the net assets, now it is given net aggregate value of identifiable assets and liabilities as measured in accordance with Ind AS is determined at 1,200 lakhs. So NCI is being, because it is clearly given, actually this particular line is unnecessarily given. The management have elected to adopt full goodwill method. What does it mean? That means we have decided to value NCI at fair value. That's all. So because your net assets is equal to 1,200 lakhs, your net asset is equal to 1,200 lakhs, first of all you will have to write here NCI. And NCI at fair value. What will be the fair value of NCI? Because for 90% you are paying 900 lakhs. So what will be the amount which you would pay for 10%? What will be the amount which you are going to pay for 10%? I think that will be equal to 100 lakhs. Correct? By subtracting 100 lakhs from 1,200, I will get acquired share. Acquired share. Now, acquired share will be equal to 1,200 minus 100, that is equal to 1,100. Now we are going to compare it with the amount of consideration. What is the amount of consideration? It is clearly given 200 lakhs. Correct? Amount of consideration is, 900 lakhs. So that means we are going to get this time 200 lakhs, but because amount of consideration is less, correct? Amount of consideration is less, so we shall get gain on bargain purchase in this particular case. So gain on bargain purchase this time, and 1.10 W1 Limited recognizes 100% of net identifiable assets on the acquisition dates and decide to measure NCI on proportionate share, that is 40% of S1 Limited's net identifiable asset. Net assets of S1 Limited on the date of acquisition are equal to 5 lakh and consideration payable in cash amounted to 12 lakh. This question I need not require to do. You can straight away write here, because it is clearly given that on the date of acquisition net assets is equal to 5 lakh. Correct? First of all, you compute the what we call NCI, and it is clearly given NCI is being computed on PSNA basis. So 40% of net identifiable asset is equal to 5 lakh. So 40% of 5 lakh will be equal to 2 lakh. Correct? So by subtracting 2 lakh from 5 lakh, that means I have so far recorded 3 lakh worth of net asset related to acquirer. Now we are going to compare it with consideration, which is 15 lakh. So 3 lakh worth of net assets we are getting. We means acquirer company is getting against a payment of 15 lakh. Obviously, the difference will be equal to goodwill. And last question of this particular section, F1 Limited and F2 Limited. F1 Limited acquired F2 Limited by purchasing 70% of equity share for rupees 15 lakh in cash. Correct? The fair value of NCI is determined at 6.9 lakh. What is this percentage of stake which acquired company acquired? 70%. What is the amount of consideration? That is 15 lakh. What is the mode of payment? That is cash. Now, what is the value of NCI? Because it is given as 6.9 lakh. 6.9 lakh, it is given to you in the question itself. Management have elected to adopt full goodwill method and to measure NCI at fair value. Correct? Aggregate value of identifiable asset and liabilities measured in accordance with Ind AS is equal to 22 lakh. So first of all, if NCI is measured at fair value, see, whenever we say full management has elected for full goodwill method, it means they have already decided to compute NCI at fair value. Important thing is that NCI value is already given to us in the question. So that means that value is at fair value. Is it clear to you? So 100% of net identifiable asset 22 lakh. First of all, as usual, we are going to write it. Then we will subtract the fair value of NCI, which is given in the question as 6.90. So we shall be left off with 15.10. This 15.10, what does it reflect? It reflects the share of acquirer company in the net assets. Then you are going to compare it with the consideration. Consideration amount you saw 15 lakh. So this time what we are getting, that is gain on bargain purchase, because the amount of consideration is less than the share of net assets. Now suppose if in this question we would have gone for proportionate share of net identifiable asset, that is PSNA approach. Only difference is that rest of the item would have remained so. Only thing that here fair value, now we will take proportionate value, 30% of 22 lakh, 6.60. So now share of net asset will be equal to 15.40 and consideration is 15. So your gain on bargain purchase will be 0.40. And in both the cases, how you are going to record the entries, I have also mentioned this. Is it clear to you? So in this way round, we have come to the end of section 1. In the next section, we will take a very heavy topic, that correct common control topic. And this topic is very, very important, formidable and interesting at the same time, and very vital from the examination point of view too. So on such note, we take leave of you with the promise to meet you again at same time. So as usual, it's time to say now goodbye and good night.